Welcome to Trends with Benefits, a podcast by VanEck with a forward-looking perspective. We explore new ways of thinking about the markets, investing, work, and life. Here's your host, Ed Lopez.
Welcome to Trends with Benefits. Today's episode is a special series of Trends with Benefits episodes dedicated to Bitcoin. VanEck has been focused on providing non-jargon education for investors about Bitcoin. And our goal with this special series is to cover important Bitcoin concepts investors should understand through conversations with knowledgeable guests who are living and breathing Bitcoin and cryptocurrencies. Today, we'll kick this special series off with the basics. And in future episodes, we'll cover other topics like how to trade Bitcoin, how exchanges work, and future Bitcoin developments. My guest today is Pierre Rochard, Bitcoin strategist for Kraken, one of the largest and oldest Bitcoin exchanges in the world. Pierre, welcome.
Hi, Ed. Thanks for having me on.
Well, I'm really excited to talk to you today because, Bitcoin has really gotten a lot of attention lately, especially to start out 2021. And I think a lot of people are still trying to get their hands around Bitcoin. And so what we're going to talk about today is what is Bitcoin for investors? But before we do, I'd love to talk a little bit about you, about your role and your mission at Kraken as well. Can you start out with a little bit about Kraken?
Yeah, absolutely. So as you mentioned, Kraken is one of the oldest and largest Bitcoin exchanges. Founder, CEO, Jesse Powell started Kraken because he had concerns about the existing exchange infrastructure. And I think this goes all the way back to 2011, where your listeners might have heard about Mt. Gox, which was an exchange back then that wasn't so secure. And so Jesse wanted to build the most secure exchange. And I think that he really accomplished that. And now it has earned the trust of clients around the world, both individual traders, investors, and now institutional investors as well. My role is focused on Bitcoin. Bitcoin is the most liquid cryptocurrency of them, and it has really gained the most traction, even in terms of its brand recognition, where investors around the world know the word Bitcoin, and they might not necessarily be familiar with all the other cryptocurrencies. My role there is focused on two facets. One is education. There's still a lot of education that needs to happen for folks to understand what Bitcoin's value proposition is, why it's interesting. And I do that both internally and externally. So all of the new hires at Kraken, they get to hear me ramble on about Bitcoin for at least an hour. Sometimes I go into 2 hours. And externally, like today's show. Second of all, it's about informing our product and engineering teams on possible opportunities in the Bitcoin space of directions that we could go in with our product. So it's a very multifaceted role, and it's very exciting. And I'm very grateful to have gotten this opportunity from Jesse and his team.
So let's talk about what we're here for Bitcoin. And let's talk about what Bitcoin is. So if I ask you the simple question, what is Bitcoin? And by the way, be prepared for a lot of dumb questions from me. But so to start out, what is Bitcoin?
So Bitcoin is an electronic cash system. It might be weird to hear about cash in this context because we generally think of cash as being paper money, right? But really, from an accounting perspective, cash should be contrasted with credit, all right? When you hear someone say cash or credit, right? That's really what is meant by electronic cash for Bitcoin, because it is a system where you have, first of all, transaction finality. So there's no reversing of payments on Bitcoin. And then second of all, you don't have a liability in the sense that you're not holding something that somebody else owes you. You're holding the thing itself. It's a bearer instrument. And so it's like holding physical gold or holding physical cash. Now, the nice thing is that it's electronic. So it's these private keys are numbers and letters that you can store on a computer, you can store in these newfangled hardware wallets, in a USB device. Now, the third thing is that it's a system. And so when people talk about Bitcoin, often they're talking about two distinct things. They're talking about the monetary unit, BTC, right, Bitcoin, or they're talking about the network itself, the Bitcoin system as a whole. It's important to distinguish between these two because it's very easy to be captivated by the first, right, of just looking at the monetary unit in a vacuum and looking at its exchange rate versus the dollar or versus other assets and coming to certain conclusions about it without ever going to the second, which is looking at what I would call the fundamentals of Bitcoin, which is what is the system itself? The system itself is composed of two pieces. It's composed of a peer to peer network of nodes. And so you can think of this like BitTorrent, if you're familiar with the file sharing craze that preceded Spotify and Netflix. The idea there is that you can run a piece of software on any kind of computer, really, and connect it to this network, connect it to other people running this same software, and be able to download the whole Bitcoin ledger so that you know exactly what's going on the network itself as a system as a whole. And that provides a level of both transparency, but also cryptographic assurances that has no equal. Because you're able to use cryptography to verify the integrity of the system and to verify that all of the rules of Bitcoin, the protocol, are being followed. The second part of the cash system itself is the Bitcoin mining. This is what you might hear about in the news when people talk about the electricity consumption of Bitcoin mining. And what the miners are doing is that they are providing a service to this network of nodes by providing an order to transactions. One of the issues in a transactional system is understanding which transactions happened first before the others. If you don't have that, then people can do what's called a double spend, where they spend the same asset twice. And so the only way to prevent this is by having some temporal ordering of the transactions so that you can prevent this double spending. This part of the system is arguably what the innovation is. You might have heard of people talk about how Bitcoin's underlying technology is blockchain, right? And the blockchain is what the peer-to-peer network of nodes are maintaining. The reality is that existed before Bitcoin. If there are any software engineers listening, they might be familiar with version control systems like Git that use cryptography to verify the integrity of their ledgers. What systems before Bitcoin lacked is this element of proof of work mining, where you can prove that you have consumed a certain amount of resources in order to append to the ledger. And that really is Bitcoin's underlying technology, is the proof of work mining. Even though it's also a source of tremendous criticism, from the electricity consumption that it has. At the end of the day, it is just software that people run on their computers and a database, right? A database that is replicated. So everyone has a copy of the database of the Bitcoin ledger. And this software, if you look at it, the software is it's 20 megabytes. So you can go to bitcoincore.org. You can download this software onto your computer, and it works on very small computers like a Raspberry Pi. It can work on a server. And it's important to distinguish this piece of software, the node software, from the Bitcoin mining, because the node software doesn't take up a lot of resources at all. In fact, that's really what differentiates, I would argue, Bitcoin from gold in some ways, is the cost of verification. The cost of verifying that your Bitcoin are real, that they're authentic, is very low. And you would be able to verify an arbitrary quantity of value, an arbitrary amount of Bitcoin. And really what the software is doing, it's verifying all of the Bitcoin. So it's verifying all 18 million of the Bitcoin. And so the promise of Bitcoin is that it democratizes the ability to verify the monetary unit. And don't even get me started with fiat, right? Because with dollars, like, good luck auditing the Fed. They'll never let you do it.
So Bitcoin itself, so you're able to download the software. audit the Bitcoin that's in the network. You get some Bitcoin. How does the mining aspect work? And I guess the verification of transactions. Just give me another sense of where, the value starts to come into play.
Yeah, absolutely. So the way that you receive Bitcoin is, first of all, by generating a private key. And so this private key is like a password, random numbers and letters. Don't share it with anyone. It's yours and yours alone. You take this private key and you use elliptic curve cryptography. And elliptic curve cryptography has been around for a very long time. And so it's something that's well understood by cryptographers and mathematicians. And as far as they know, as far as we know, it is unbreakable in the sense that with elliptic curve cryptography, you're able to take a private key and generate a public key from it. And so from there, you have this public key. You then would share that, or a version of it called an address. You can think of an address as like a credit card number or a routing number, bank account number that you share with others so that they can send you money. And so from there, your counterparty is going to send Bitcoin to that address. When they do that, what they're doing is that, first of all, they're unlocking their Bitcoin by using their private key and signing a transaction with their private key. And then they're locking up those Bitcoin to your address using a smart contract.
And that's built into the software then, right? That's built into the code.
Correct. And your wallet software on top of all of this is abstracting away everything so that you're not having to think about these low-level details. What these details matter for is if you really want to have confidence that the system is sound, that it has fundamentally less uncertainty than any other transactional system in the world. Because while what I'm describing may sound complex, believe me, it's a lot simpler than the underlying technology for a wire transfer. Okay, if I actually try to explain to you how a wire transfer mechanically works at the lowest level, it would take us longer to explain it. It would be more complex than for me to explain how a Bitcoin transaction works. And so then this transaction, your counterparty broadcasts it to the Bitcoin nodes. When you're running this node software on your computer, there's a backlog of transactions that are trying to get into the next batch. So there's a batch of transactions that gets published every 10 minutes. And so in between each batch, there's an accumulation of transactions that happens. Now, there is a size limit to the batches. Sometimes there's a big backlog of transactions trying to get into the next block. Sometimes that backlog is small. When there's a lot of congestion on the network, when there's a lot of transactions trying to get into blocks, they compete with each other by raising their transaction fee. Now, this transaction fee gets paid to whoever mines the block. So it goes to the miner. And that's why you might hear folks talk about Bitcoin having high transaction fees. But you might also hear people say that Bitcoin has low transaction fees. And the reason that you hear these two messages is because Bitcoin's transaction fees are volatile. Because there's this backlog of transactions is going to depend a lot on the trading activity happening between exchanges. Because arbitrage traders will be moving Bitcoin between trading venues using the Bitcoin network. And so when there's a lot of volatility, there's a backlog of transactions and vice versa.
So it's kind of like Uber. When you try to get an Uber, when it's really busy, prices are higher.
Yes, exactly. Congestion pricing. And the reason that there's a size limit to these batches of transactions is because that's what allows Bitcoin to be decentralized. If you didn't have a size limit, then you wouldn't be able to run a Bitcoin node on your laptop because people would fill up these massive blocks and then your laptop would crash because it would be too much data. And so the Bitcoin developers, Satoshi, the creator of Bitcoin, in 2010, he added this size limit. And the Bitcoin developers are focused on getting more utility out of the Bitcoin network and getting more throughput without increasing these batch sizes so that we can keep Bitcoin decentralized while also increasing the number of payments and the amount of settlement happening on the Bitcoin network.
I'm used to using technology and operating systems and things of that sort that get updated constantly. Does the Bitcoin network get updated? How does that work? And can somebody Or can a group of people decide to change the code and up the limit to Bitcoin that is currently programmed in?
So any change to the Bitcoin software, you have to get everyone on the network to change their software to your version in order for it to become Bitcoin. And then it's still even debatable why we would still call that Bitcoin. You would have to fundamentally change the social consensus. Much more important than the code change itself is the social consensus around there only being 21 million Bitcoin. And so it's really that part of it I'm not very worried about because there is a very strong social consensus on Bitcoin's monetary policy. And I haven't really heard anyone make any kind of credible arguments for why that monetary policy should be changed. And I expect that to continue to be the case.
I wonder if we could spend a little time on perhaps the valuation or how you might look at rationalizing the valuation of Bitcoin that, we all see in the headlines relative to the transaction or how the software works kind of in general. How would you look at rationalizing that valuation, that skyrocketing price?
Frequent response on that question, which I actually think is reasonable, but I'll let the audience decide, is that one Bitcoin is always equal to 1 out of 21 million Bitcoin. And so you always have a fixed percentage of the total Bitcoin out there. And so that's really the valuation that matters because it's about the internal exchange rate, right, of your Bitcoin versus the Bitcoin system, rather than its external exchange rate with other currencies or with its purchasing power at a supermarket. Really, that's kind of my fundamental thesis on Bitcoin and why I find it exciting. Now, in terms of its external exchange rate, I think that is multi-layered. On the first layer, you have folks like me, the people who frankly will just never sell their Bitcoin. And the reason I'm doing that is because I'm thinking of Bitcoin in terms of not only multiple decades, but multi-generationally, right? I have children. I want them to have a good life. When I'm accumulating assets, I'm looking to accumulate assets that I think are undervalued. And right now, I think that, frankly, Bitcoin's the only undervalued asset I see. I keep a close eye on the stock market. I think the stock market's overvalued right now. I keep a close eye on the bond market. I think it's overvalued. I think gold is at fair value. All right. I know our audience here, gold, fair value. Bitcoin, I think, is fundamentally undervalued. And the reason I think it's undervalued is because not enough people understand Bitcoin's fundamentals yet. Until we reach that point, I think Bitcoin's undervalued and I'm accumulating. So that's on the demand side, right? And that's been steadily growing. On top of that, you have the supply shocks. The new Bitcoin entering into the market from the miners, those are getting cut in half every 4 years. The bottom line is that a year ago, they were selling 12.5 Bitcoin every 10 minutes. And then after the halving, they were selling 6.25 Bitcoin every 10 minutes. And you've got folks, whether it's Grayscale, the Cash App users or Coinbase users, like they're scooping up that supply. And so that, to me, is the combination of that fundamental demand and then that supply causes then the exchange rate to appreciate. And then you layer on top of that what folks call the speculative demand. The momentum traders who see a momentum trade, right? They see, okay, Bitcoin's exchange rate is appreciating. I'm going to pile in. They're looking at it not as long-term savers like me. They're looking at it as a short-term trade, right? They're looking at it to make dollars. That's really what causes the price to go parabolic, because not only did they start buying, they start adding leverage to their trade. And there's a lot of platforms out there where you can get leverage to Bitcoin, and whether it's futures trading on CME or using an unregulated venue like BitMEX, where you can be gaining leverage, or actually just using your Bitcoin as collateral to borrow dollars and then to go use those dollars to buy more Bitcoin. So we're seeing people take on leverage in every form because they're part of that momentum trading wave.
What is the fundamental value, or like what characteristics are you looking at? I get the limited supply. Is there something else? Is it use of Bitcoin, or growing the growing network of Bitcoin?
I'd put fundamental value into three buckets. First of all, is the freedom to receive the asset. With Bitcoin, you're able to create that private key. You can create it on literally any modern computing device will have the ability to create a private key. And so that really means that Bitcoin is permissionless. And that is fundamentally an advantage over all the other systems where to receive, for example, to receive gold, you have to have a physical address. The second fundamental value driver that I see for Bitcoin is the freedom to hold. Within that is both what you were talking about, the sound money, right? The fixed supply, where you can hold it without worrying about dilution. The other half of the freedom to hold is the resistance you have versus other people trying to steal your Bitcoin or versus nature trying to steal your Bitcoin, where Bitcoin has a fundamental advantage. Not only does it have an advantage on both of these, but also over other cryptocurrencies. So other cryptocurrencies, and this is very important for investors who are starting to research this market, other cryptocurrencies do not have the same monetary policy that Bitcoin has. They don't have the same credibility of the monetary policy that Bitcoin has. They don't have the same level of decentralization. They don't have the same social consensus, right? We mentioned how important the social consensus is. Bitcoin's multi-sig technology, Bitcoin's network as a whole, secures more value than any other cryptocurrency. It is more battle tested, it is more robust, it is safer than any other cryptocurrency. Bitcoin fundamentally differentiates itself from the rest of the cryptocurrency market along those two axes. The third fundamental for Bitcoin is about your ability to send your Bitcoin to whoever you want. And that's where Bitcoin mining is very important, because if you want to make sure that your Bitcoin gets sent to your counterparty, you put in a big transaction fee. Not only is that transaction fee going to allow you to be at the top of the queue in the backlog of transactions, but it also makes it uneconomical for any of the miners to not include your transaction in the batch. And so that's where we see that Bitcoin, not only is it a permissionless open system, it's a neutral system where folks who might otherwise be enemies come together and can use this system on an equal basis. And this is really something unique to Bitcoin. And the thing about Bitcoin is that it says, let's keep policy questions and politics where they ought to be in the world of politics and policy. They should not be at the payment system level. The payment system should be neutral and of equal access, because if we don't abide by that principle, then nobody will be able to use the payment system, because there's always going to be someone out there who doesn't want you using it. And so it's really it's an all or nothing proposition. And I'm not describing a slippery slope. I'm describing the reality of how things are actually happening today. And so we saw this happen under the previous administration with Donald Trump, who wanted to make sure that Europe was not able to do any business with Iran. Right. And the Europeans were not happy about this. And the Europeans have been trying to create a separate payment system so that they can avoid this issue. It highlights a fundamental value driver for Bitcoin in that you can send your Bitcoin to whoever you want. If you're doing things that are illegal, I want law enforcement to find you and to prosecute you and to put you in jail. Okay. But that's a separate question, right? And that's going to take law enforcement's detective skills and their ability to enforce the laws. But that's different than the question of should you be able to use Bitcoin or not.
Really interesting discussion, and I think perhaps a topic for a whole other episode. Is there a long-term trend, say in the Bitcoin world, that you think investors should be paying attention to that might play out over the next several years?
Yeah, well, so the long-term trend that I think has been underexplored is using Bitcoin's scripting language and upgrades to it in order to enable more advanced smart contracts, where we'll be able to build a decentralized financial system on top of Bitcoin. Today, we have, for example, let's say a CME futures contract, right, which is going to use a reference rate, a benchmark for settling contracts. In the world of cryptographers and of Bitcoin, that reference rate is called an oracle. So it's a price oracle. And with Bitcoin, what we're starting to see happen is folks using Bitcoin's smart contract abilities to take these price oracles and feed these prices into a mechanical contract so that you're not having to depend on a centralized third party to actually execute the contract. And so the oracle is providing cryptographic proof of whatever the underlying spot market is. Everything after that is self-executing, so that we're no longer having to depend on clearinghouses or on regulators or anything like that in order to have financial contracts. All this to say that we're seeing not only censorship in the payment system, but today, as we record this, we're seeing censorship in the financial markets. Broker dealers and regulators are saying that you are not allowed to buy GameStop. And they might have perfectly legitimate reasons to make that statement, right? But it really highlights the need to have decentralized systems that, again, are neutral, so that for whatever reason, if you want to buy GameStop and it might be against your financial interests to do so, that you can still do so. And so I think that building this decentralized financial system on top of Bitcoin's assurances, right, its fundamental properties, is going to unlock a huge amount of value for folks.
All right, so we do a segment called Trend or Fad. It's kind of a speed round, and I'm going to mention a few different concepts. And feel free to say trend or fad. You can explain it if you want to or not. Day traders, trend or fad?
Trend, because I think that it's about democratizing access, right? But I think that it's a reaction to another trend, which is passive investing. Those are the two trends that are the barbell distribution of financial markets going forward. And we're going to have decentralized hedge funds, right, where day traders get together on forums on the internet and come up with strategies and coordinate that way. And it's going to be a problem for regulators. It's going to be a problem for financial markets as a whole, because now you have mobs storming the Wall Street.
How about central bank digital currencies, trend or fad?
Trend. It's the continuation of a trend of central banks creating more money. Anytime that there's a new way that they can issue currency, they're going to use it. Historically, they've done it through the printing press. Now they're doing it through centralized electronic systems. And if they can do it through decentralized electronic systems, then they will do that as well. I'm skeptical that they will have actually decentralized issuing of government currency. I think that they will use marketing terms to make it look like it's decentralized, but in practice, they're never going to want to give up the control over who can actually access the system, right? I don't think that the Federal Reserve would allow, for example, Iranians to use dollars, Federal Reserve issued CBDC. It's unconscionable to them. So they'll never be able to be neutral like an actual decentralized system is.
And then finally, Austin, Texas, trend or fad?
Selfishly, I want to call it a fad so that more people don't move here. But it is where I'm based out of. And I think it's a trend because both COVID, but I think it's been a longer trend with the internet. Remote work is a huge trend. And so folks can pull away from urban centers. Now what matters, I think, is cost of living, livability, amenities, schools, the great outdoors, but also obviously taxes, regulations, and folks trying to find somewhere where they can look after their families financially and all the rest.
Pierre, this is awesome. Thank you so much for your insights. I really appreciate it. What's the best way for people to find you, connect with you, and follow you?
Yeah, I'm on Twitter. I'm on Twitter too much, arguably, at Pierre, Pierre _Rochard, Rochard. I have such a following on there that I now have impersonators. So people pretending to be me in order to scam, which is unfortunate, but watch out for those. Take a look at Kraken. It's one of the largest, most secure Bitcoin exchanges, and shoot me a message. And then I'm happy to help folks on board at Kraken to get their first Bitcoin. do some research on Riot Blockchain. They are mining in upstate New York using a hydroelectric dam. And so it's green Bitcoin mining. And I'm very excited about what they're doing.
And thank you for tuning in to this special episode of Trends with Benefits. Stay tuned for other follow-up episodes on Bitcoin. Coming to you soon. Thanks.